Folks, check out shares of Wayfair. They're surging after quarterly results this morning. The home furnishings retailer reporting earnings of 70 cents a share. That was much better than the 43 cents that the street had expected. Comes on revenue of $3.1 billion. That was also ahead of expectations. That stock right now up by about 11%. Our next guest is going to weigh in on earnings, tariffs, the state of the consumer. Joining us right now is Wayfair CFO Kate Gulliver. She is Wayfair's retail brand. She's Wayfair CEO. Those retail brands include All Modern, Birch Lane, Joss & Main, and Perigold. And Kate, thank you for joining us this morning. Just running through these numbers quickly, it looked like your active customers were down by 2.3%, but the customers you do have were spending more, an increase per active customer of 6.1% in revenue, and they were ordering more frequently, too. So what's really happening? Explain what you're seeing.
Yeah, but thank you for having me and happy to be here. So we're thrilled with the quarter. As you pointed out, very strong revenue growth, 8% overall, 9% when adjusted for the closure of our German business. So what you are seeing, to your point, is order volume growth. So customers are coming, they're transacting primarily, during promotional periods, which are very exciting to consumers right now. And we're seeing that manifest in, this really healthy top line revenue beat, which really shows sustaining share gains. This is a category that has been down for quite some time. We think the category itself is maybe now flat to down, and you see us growing 8%, 9% adjusted, and I think that really speaks to the overall strength of the model. So we're quite pleased with the performance.
Yeah, I want to run through some of the stock charts. We're looking right now at the 1 year. You're up 115%. I think for 6 months, you're up by close to 200% once you add in these gains from today. And then if you look back at a longer term chart, over the last 5 years, the stock is still down. But that's because what we saw in COVID, the space exploded. In fact, if you look at it even longer than 5 years, you can see that that was this huge hill, a huge mountain between 20 to 22. But yeah, the stock has been really taking off. What are you doing differently than everybody else in the category right now?
Yeah, that's a great question. I mean, you sort of walked back to a bit of our history. Obviously, the COVID period for this category overall was a significant moment of purchasing, right? You had pull forward of demand. The category reached accelerated heights. Everyone was in their home. Then you had a pull back in, late 21, 22, 23, and even 24. It's only sort of just now that it seems that the category is, relatively flat to slightly down, stabilizing. But we think we're doing a number of things that accelerating that growth. And they're really initiatives that started last year and, in prior years that you're seeing the benefit of now. So foundationally, across the base, you have to have great pricing, great availability, and incredible delivery speed. That's what we call our core recipe. That really has to be in place to make the rest of the model work. Then on top of that, you're seeing benefits of initiatives like our loyalty program, which launched about a year ago. So it's relatively new, but the consumers in that program are showing nice incremental spend. You mentioned at the beginning that existing consumers are buying more from us, enhanced ordering. That really, you see that highlighted in something like the loyalty program, which encourages consumers to come back more. Then you have programs like
Oh, go ahead.
I was going to say our Wayfair Verified program, which is also a new program. It launched a little over a year ago. We put our stamp on products and say, hey, in this category, we think that's the best product. It makes it a little easier for the consumer to shop, identify what's best for her. And again, that leads to more shopping on our platform and ongoing share gains.
What impact have tariffs had? President Trump announced these new tariffs on furniture imports in late September. Obviously, you all have a lot of furniture and other goods that are going through. But I know in the past that tariffs haven't always had a huge impact because you guys are a marketplace.
Yeah, that's you sort of highlighted it right there. So it's obviously been a very dynamic tariff environment. To your point, we've actually navigated tariffs since 2018, 2019. And what we spoke about in April when the tariff market started or tariff landscape started evolving was that we did think that the benefits on the back end of the marketplace-like model. So on the front end, we're a retailer. We are the retailer and the platform you transact on. But on the back end, we act like a marketplace. And that means we work with thousands of suppliers from all over the world, some of whom are domestic in the U.S., some of whom are in Asia, South America, Turkey, et cetera. And those suppliers are really competing for the customer. We sell categories where there are many similar products. So we might sell many versions of this chair, for example, on our website. And if there's a supplier that's, disadvantaged for some reason, another supplier may have a better price or faster delivery, and they'll come up to the top of the sort order. So that natural competition across the suppliers and our ability to, nimbly work with suppliers from all over has helped us be able to keep prices low, availability healthy for our customer, and enable her to transact and continue to, frankly, build share gains.
Kate, we have to run. We have a lot of breaking news, had the president speaking, but we really appreciate your joining us today. Again, that stock right now up by about 11.6%. We hope to see you again.
Thank you so much.